In the meantime, the third quarter earnings season is here, and investors remain very positive about company earnings following the recent improvements in macroeconomic indicators, coupled with sustained moderate level of activities in the equities market so far in the fourth quarter of the year. United Capital PLC, Ikeja Hotel, UBA, and Forte Oil are some of the early announcers of 9 months 2017 results, and investors' reactions have been largely mixed. We could see that at the equities market that halted a 3-day positive momentum yesterday after closing 82 basis points, with year-to-date returns settling at 36.4%. Now let's look at this with Robert Omotunde, Head of Research at AfriInvest. Good morning, Robert. Thank you very much for coming on the show.
Good morning, Chimeze. Thanks for having me.
It's the third quarter earnings season, and we have seen a couple of companies release their results. What are your broad, expectations for the current earnings seasons across major sectors?
Well, like you rightly mentioned, we've seen that we've entered effectively into the third quarter earnings season, where we expect most of the companies to start churning out their result. And we've seen United Capital, UBA, and Forte, of course, Ikeja Hotel taking the lead in this particular direction. And from what we've seen in what they've announced so far, UBA leading the banks, we've seen that the resilience of these companies, especially now that the economy is turning positive, is beginning to show. Our expectations for the broader equities market, when you analyze across sector, is that we expect third quarter earnings to be very strong, especially given the traction we've seen in the half-year results. We've seen that a couple of sectors, consumer goods, for example, we saw that most of the companies were able to churn out very positive numbers. I think on the average, you see the consumer goods company growing their revenue by above 50%. And if you look at the industrial goods sector too, Danksem and Lafarge taking the lead in this sector, we've seen very positive performance. The oil and gas sector too has not been left out, even though they have a couple of issues that are pressuring their profitability, so to speak. But in fact, from the top line performance, we've seen that their performance has been largely good. So by and large, if you analyze the major sectors, we believe that this third quarter earnings is going to be positive, and we think that investors are keeping their fingers crossed and taking position ahead of this.
Okay, looking at UBA and the results they came up with, what do you think that portends for the rest of the Tier 1 and, of course, other banking stocks?
Okay, good. We saw that result, I think, on Monday, and we've noted earlier that we've seen a lot of these banks, turning out very good numbers, especially from the core interest income, which, of course, most of the banks, especially the Tier 1 banks, we saw them turn a very positive number. I think UBA this time was able to also release a very fantastic result, especially from the gross earnings perspective. Then the other part of the result, which we also noted, was the fact that they were able to grow their non-interest income, even though when you dissect the performance quarter on quarter, that is quarter 2 relative to quarter 3, we saw that the performance wasn't as great, of course, because we saw a very high base in second quarter of the year. But the third quarter earnings has not been really positive, especially from the interest income line, even the non-interest income, which was driven by FX as at half year. But if you take the cumulative quarter together, you've seen that the bank has had a very good year. In terms of other ratios, UBA is also taking the lead. We've seen that they are not one of the banks that have the non-performing loan issue. Their net interest margin came in as strong as well. Currently, they have even cost to income, even though cost to income is still an issue, but we've seen that moderation. I think their cost to income ratio moderated from 65% as at the corresponding quarter in the previous year, and this time around we saw it at about 56%. So they are also working on that. So by and large, you see that their return on equity is very strong at 18%, and is one of the factors which you noted has been driving the performance of the banks. So the banks that return very good ROE, we see investors pricing them in that light, and UBA has been a beneficiary so far in 2017.
Now let's look at Fidelity Bank's Eurobond. That bank has successfully issued, that's about 400 million US dollars in Eurobond at a coupon rate of 10.5%. And we also saw a kind of a sharp, 5% increase in the share price. That was on Monday. Now, is this attributable to the Eurobond issue?
Well, we think that, of course, when Fidelity Bank approached the international debt market for that issue, there were a lot of optimism, plus some speculation where investors were thinking if they would enjoy as much attraction as we've seen for a couple of other Tier 1 banks, UBA and Zenith especially, who have also gone to the international debt market. But when they came out and we saw the result at 10.5%, it's not quite surprising if you consider their sovereign rating, relative to these other banks that have approached the market. These other banks, Zenith and UBA, have been able to issue at a much more lower coupon rate. But this 10.5% is definitely not surprising. But in terms of the fundamentals of the company as well, even though it's a Tier 2 bank, it continues to be one of the leading Tier 2 banks, in our coverage, for example. And then we've seen their performance, even when you analyze their first quarter performance, they had a decent performance in terms of most of their key ratios. Gross earnings was up about 22.1%. This was also driven by the interest income, which grew somewhat at about 18%. And if you analyze them across other key ratios, they are one of the banks with the highest net interest margin, especially in the Tier 2 space. I mean, when you analyze their net interest margin, they're about the highest, or one of the highest in that Tier 2 space. And in terms of costs, they're also trying as much as possible to put a rein on their costs as well. But ROE usually is being pressured for Fidelity. Currently I think they're about 8% return on equity, which is why you see most investors price them the way they are priced. We think investors are just trying to take position ahead of possible positive results that we may see for third quarter for Fidelity.
So talking about positive, are you also expecting such a positive result from them?
Well, we think that if the performance of Q2 is anything to go by, we think that they will come out strong, even in this quarter, although there are issues that I mean, from if you analyze their loan book, one of the sectors that is constituting most of their impairment charges is the transportation sector, but by and large, they are still within regulatory limits, as at full year, in terms of non-performing loan. And of course, cost of risk is still at about 1.2% for the bank. We think that they are possibly going to be able to sustain the positive performance which they recorded in half year, even in third quarter. So we think that's probably what is driving what we saw on Monday.
Okay, let's look at the consumer goods sector. We have seen quite a lot of improvement in macroeconomic condition, particularly since the beginning of the year. We've seen the purchasing manager improve and quite a lot of, improvement there. So are you expecting all of these positive outcomes, the general macroeconomic condition, to perhaps rub off on the earnings that would come from that sector?
Yeah, definitely. We've seen that in half year. I mean, most of the consumer goods companies were able to raise their prices, because there were higher cost pressures coming from foreign exchange, because most of their inputs are imported. Thanks to the CBN for the kind of respite that we've got in foreign exchange market, we have some stability now. And most of these consumer goods companies are able to access foreign exchange from the official windows, I&E especially. Nevertheless, they still have these cost issues, and which, of course, because most of the companies in this sector, if you dissect across various segments, for the flour millers, the sugar producers, and the beverage producers, most of them operate within the segment that we call the necessity products, and because of that, they've been able to more or less pass on the cost to consumers, such that when they raise prices, earlier in the year, even though volume was affected, but because of the significant hike in prices, we saw a lot of them churning out very good numbers. So if you look at the beverage segment, for example, Nestle is taking the lead in that regard, and if you check the numbers that Nestle released as at half year, it was largely positive. They grew revenue by more than 30%, by the first half of the year. Although we know that there are cost pressures, especially from finance charge, because most of these consumer companies are also leveraged. If you look at the sugar producers, for example, Dangote Sugar hiked price, sometime in the year. They are the leader in the industry, and they were still able to, pull through. So we think their performances are going to be positive for third quarter.
All right, Robert, we really don't have enough time,
Yep.
but just a quick one. Give us your top stock picks across the sectors.
Okay, so in the banks, we are still very positive with the tier 1 banks, so the likes of GT, UBA, First Bank, of course, and Zenith are our top picks within the banking sector. For consumer goods, we'll still play with the Nestle, and the Nigerian breweries. For industrial goods, Danksem and Wafaj are our top picks.
All right, thank you very much, Robert.
Yep.